In the world of technology, there are giants. And then there's NVIDIA. In July 2025, it shattered records, briefly becoming the first public company in history to be worth $4 trillion. Its stock has delivered life-changing returns, soaring nearly 21,000% over the last decade. But for investors today, the question is simple. Is NVIDIA a bubble about to pop? Or is the architect of the AI revolution just getting started? Let's break down the data. NVIDIA's power isn't just hype. It's rooted in near-total market control. In the data centers that power artificial intelligence, NVIDIA is the undisputed king, controlling between 88% and 98% of the AI chip market. Its chips are the engine behind the generative AI boom. In the gaming world, its lead is even more staggering, commanding a 92% market share for discrete graphics cards. But NVIDIA's true competitive advantage, its moat, isn't just silicon. It's a software platform called CUDA. For over a decade, developers have built the entire AI world on CUDA, creating massive switching costs that keep rivals at bay. This market dominance has translated into one of the most incredible growth stories in corporate history. NVIDIA's annual revenue more than quadrupled in just 2 years, from around $27 billion to over $130 billion. The engine, its data center segment, which now accounts for nearly 89% of the company's total sales. In its first quarter for fiscal year 2026, the company pulled in a staggering $44 billion in revenue. But what about the price? With a trailing price-to-earnings ratio over 50, NVIDIA looks expensive compared to the broader market. This is the heart of the bear case. However, the bull case hinges on what's next. Based on future earnings estimates, its forward PE ratio is a much more reasonable 36. The investment thesis is that NVIDIA will rapidly grow into its valuation. But this makes the stock incredibly sensitive. It's priced for perfection, and any sign of slowing growth could trigger a sharp correction. Looking ahead, NVIDIA's growth is fueled by a relentless product cycle. The new Blackwell platform is ramping up now, and its successor Rubin is already slated for 2026. The company is also expanding into new markets like sovereign AI and automotive, which it targets as a $5 billion business for fiscal 2026. But the road isn't without obstacles. The biggest is geopolitics. U.S. export controls on China are a direct multi-billion-dollar headwind. Competition is also heating up. While AMD remains a distant second, the most significant long-term threat comes from NVIDIA's own customers, giants like Google, Amazon, and Microsoft, who are all developing their own custom AI chips to reduce their dependency. So, where does this leave investors? The bull case is clear. NVIDIA is the indispensable engine of the AI revolution with a deep software moat and explosive growth. The bear case points to a sky-high valuation, intense geopolitical risk, and looming competition. Our analysis suggests the powerful tailwinds of AI adoption will continue to drive the company forward. We maintain a bullish outlook with a 12-month price target in the range of $195 to $210. For investors with a high tolerance for volatility, NVIDIA remains a core holding to gain direct exposure to one of the most profound technological shifts of our lifetime. But as always, in a market moving this fast, stay informed.